What is up, guys? Happy Saturday. So today, just a quick video from me to help reinforce the idea of a potential longer term bullish trend, talking about the next several weeks, maybe the next month or two or three, where we could see a larger rally than potentially most people expect. And if you've been following the channel on the last, say week or so, a little bit more than that, I've been making more bullish themed videos because the charts are suggesting this potential rally, and we have been seeing 2-3x moves in certain altcoins. It's starting to move, so we have this mini alt season. If you haven't watched my previous videos, go and watch them. By the way, if you enjoy this type of content, I'm trying to put in a lot of effort here to help you as much as possible, to share my thoughts and insights on these charts to help you make more profits in these markets. So if you do like this, please smash the like button. It takes you 2 seconds. Just click that like button and subscribe to the channel below. It really helps the channel grow. That's all I'm asking in return for making these videos and bringing you this content. So click that subscribe button down below, smash the like button, and let's get into it. So what I have here in front of me is the crypto total market cap 3-day chart. And as you probably know, if you've been watching my previous videos, the 3-day chart is an important one because it gives a little bit more of a stronger signal than the daily chart, but it is quicker to be able to identify potential reversals than the weekly chart, which obviously every candle is a week. So the 3 days, that nice sweet spot on this chart. As usual, I have my 50 moving average here in blue and the 200 in red. They're just the simple standard moving averages and the default RSI setting. And what is so important is this 3-day 50 moving average to determine bull or bear trends. You can go and see this for yourself, add these indicators to your chart, set it to the 3-day chart, and you can see whenever we're above the 50, we tend to have major bullish moves. And sure, sometimes there's some fake out signals, but in general, these entire bull markets happen when we're above the 50, right? So that's very, very important to watch for a reclaim. When we break below it, we tend to go into bearish territory. You can see over here, we reclaimed it, had a massive move to the upside, broke it to the downside, and since then we have been in a bear trend. We had a bit of a fake out over here in March earlier this year where we had a multi-week rally, but again, the difference between then and now is that that was much earlier in the trend. There was a lot lower to go, and we started this rally from well beneath that 50 moving average. So even though we had that setup, we had the bullish divergence, as you can see here, with kind of a flat bottom but a rising RSI, we had that pump. It got rejected by that 50 moving average, and then we went all the way down. Now we have had multiple months going sideways from the June lows, and we have that same similar RSI setup, an even bigger one, bullish RSI divergence on the 3-day chart, and we are now potentially starting a much larger rally, but we're starting it from much closer to that 50 moving average than we did this time. So as you can see, we've already reclaimed it, and we are basically just getting started, whereas at this point when we reclaimed it, we had a multi-week rally, and like I said, we were much earlier in the trend and had much lower to go. Now, after, you can see over here, this was in November of 2021, the total market cap, we are now at a year down, and you can see, you can measure this for yourself, but let's check it out. That is a 73% decline, multiple months sideways, bullish divergence, reclaim so far of this 3-day moving average. So that is potentially something that has real significance here for a reversal. Now it could still be a fake out, okay? If something happens, we get a black swan event next week with the midterm elections, or something crazy happens in the world and all the markets crash, okay, that could still end up being a fake out. So we have to watch it over there. But assuming we don't get some sort of black swan and there's no craziness in the world, this could very well be a multi-week or multi-month potential start of a new trend. So the start of a new multi-week or multi-month trend, right? If this holds. So that's why I'm saying it's very easy here to watch. We want to keep an eye on if we can continue to stay above this 3-day 50 moving average. If we break below it, set an alert, and then maybe this was a fake out and the potential bearish scenario is still in play. But until that happens, and as long as we hold, this could end up going a lot higher. And how much higher? Well, you can see I've kind of got this level circled over here. can move it to maybe over here. What that is the Fibonacci golden pocket of this entire retracement over here. It also has confluence over here with the bottom over here earlier of this year. It also has confluence with the 200 moving average on the 3-day chart. So there is a lot of confluence over here. Don't know if it's going to go that high, but if it does, that is a level where you want to be looking at potentially signs of rejection or a reversal again, and potentially there maybe having to exit the market or take profits, whatever it is. So what we are looking for now is we want to hold this level over here above the 3-day 50 moving average, and if we can get that high, you know, several weeks or maybe a few months down the line, we get to this level. That's where I would be cautious and potentially probably take profits, maybe even get out of the markets completely, because it is likely that if we get there, we probably see at least some sort of pullback, but maybe a drop back down, all the way down again, sometime in early 2023. But of course, we have to wait and see how that develops. And if we continue going higher, we do weekly updates, we do 3-day, we do daily updates. And of course, for that, you have to be subscribed to the channel. So make sure you are subscribed down below. I'm not going to make this video too long, but I want to share this with you also. The Bitcoin 3-day chart, same thing, same indicators. And you can see we are just starting to poke above this 3-day 50 moving average here, which is very, very important. Now this closes tomorrow, so we can't say we got a close just yet. This candle still needs a little bit less than 24 hours to close above it, and I want to see at least two 3-day closes above it, just to be sure to reduce the chance of this actually being a fake out. Again, it could still be a fake out if there is some black swan or some crazy event in the world, but in the same way I showed you with the total market cap, reclaiming this is already a big tick off the checklist towards a potential trend reversal. If we reclaim this, I think the next level is about 24,000, which is the 200-day moving average and the 200-week moving average. If we reclaim 24K, then potentially we go up somewhere to 30 or 32,000, but we'll deal with that later. But I wanted to show you this. Keep an eye on it. Tomorrow we get this 3-day close. At least two 3-day candles closed above it increases the chances of it not being a fake out. You can see over here, and this is why I say that, we got these wicks above it, but we never really got two closes above it. Okay, even one close doesn't yet give enough confirmation. If we get two 3-day candle closes above the 50, that's what I would consider a good chance of being a reclaim, lower chance of being a fake out. And again, like I said, if we do reclaim this, next target is probably 24K. If we flip that, probably around 30,000. The reason why I'm saying that is simply on the weekly chart. We flip 24K here, which is the 200-week moving average. Next target is probably the 50-week moving average, which has confluence with the May 21 lows at around 30 to 31,000. But of course, again, step by step, level by level. What I want to see with Bitcoin is I want to see it stay above 19,500. As long as that is the case, then those bullish targets I just mentioned are in play, in my opinion. But if we get a daily close back below 19,500, we have to be careful and start considering this might have been a fake out, and there might be a bearish scenario in play where we could still end up going to new lows, but only if we get that daily close back below 19,500. That is how I currently see the markets. So smash that like button, subscribe to the channel. If you want to get on my email list, that is the first link in the description down below. Just click that, enter your name and email, and then I can send you an email whenever there is an important update or whenever I upload a video. For the rest, have an amazing weekend, and I will see you in the next video.